Thursday, July 10th, market analysis, Stan Ehrlich. I think I got a little problem with the little blue dots right there. I always start out with the stock market indexes and go to futures and then some stocks. And my E-mini chart seems to have a little problem, but just ignore those little blue dots. So the point is, we got overbought. We are overbought again. We're right up against the highs we had before. This is a perfect spot for another potential bearish signal, but they're not happening yet. So I'm not turning bearish immediately. I need to get below yesterday's low in order to have a bearish engulfing and a minor double top, but that's not it. We're now currently almost high and last. Yep, right near the tops. Just made new highs a few moments ago. And so far, this move has made new historic highs in some indexes, pulled back to approximately a little bit below the old highs, which is some support. And I got a large support area marked off, the little yellow zone. And now trying to make new highs again. So I've got to go with the flow. There's no sell signal. We're up near the tops. Unless I get a red bearish engulfing ER sell signal, I have to turn neutral to bullish. I hate to do this when we're in overbought conditions, in circumstances where all of a sudden you could see a bearish engulfing, which again would drive me into the bearish camp immediately. But we don't have it. I know what to look for. I know what to expect. I know what should, usually does happen. And when it doesn't, then what is in progress will probably stay in progress, which is going up. Yep, I have to talk friendly to bullish on the E-mini at the moment. But I will flip to bearish in just a split second if we have some sort of reversal, especially under the current circumstances. Next, I already talked about it. Double top maybe, overbought yes, up right up against the highs. It could keep going. This doesn't look like it's stopping. Bull markets do get overbought, go sideways, or dip down a little bit, and then recover and start to make new highs again and again and again. We're just about at, very close to, the highs of a couple of days ago, going back. That, of course, would be July 3rd, Friday of last week. Very close to it. So that's a possible double top, but it hasn't started going down. Don't jump the gun. Next, QQQ. Pretty much the same damn story. New historic highs, staying in new historic high ground, but we are currently a little bit lower at the moment on the Qs, but no reversals. Not at the moment overbought, although it was several days ago. So these are the time periods when it becomes very critical as to how the market handles whatever new news that comes out, or there's no new news and just does what it does normally. Next chart. Pretty much sideways for a few days. New highs, a little dip down. New highs by a small amount. A minor dip down. An effort to make a new high this morning. We're not quite a new high. An effort to make it lower than yesterday's low. It went slightly lower, but came right back up sideways. What about NASDAQ? NQ? Same story. It is holding in new historical high ground. All hell's about to break loose, one way or the other, I'm pretty sure. But I can't come to a conclusion as to which direction yet. But when it does, it's going to be a very worthwhile move in my expectations. Next, NASDAQ having a little trouble here. Not too much though. YM, bearish engulfing, still looks viable. But we're coming up. Remember, if it gets above one tick higher than the high of July 7th, Monday, It kills the signal. So far, if you chose to go on the short side of the market, trade the short side of the market at the moment, your risk should be very small. You wouldn't get hurt badly. If you're right, you're probably premature, but you'd be looking like a wizard. I can't say that I would do that. To be honest with you, I'm just waiting for something to develop that I can get my fingers into. Next, minor little double top on the 1 minute chart. Nothing significant here. I can't scream bloody murder, sell it. Nothing's working on the short side like I was looking for. Let's look at the Russell. New highs. Overbought again. Coming into another major historical support area, but it's very, very wide. It could go up quite a bit. A little more detail shows us that 2364. I'm going to draw a line at that point because that looks real good. Right about there. And I should raise it up a little bit. Right across the several highs right in there. A couple in here. Very, very close. So yeah, this line at 23, almost 70 is a good resistance level. Let's see if it can get there. Next, Russell, 1 minute, climbing, and climbing again. What about bonds? Turned around yesterday. We have some follow through today. Momentarily, it's down a few ticks. We may have turned a corner. Can't really tell. Need to get above this line. Now, I am going to start talking about this line being a neckline of a head and shoulder bottom, because if you take the distance from the hypothetical first shoulder low, which happened to be on April 9th, to the bottom day, the low day, which is that distance right there, this yellow dotted line, and measure from the lowest day to the future, you come up with just a couple of days ago in front of the lowest low by 1, 2, 3 days. It only missed by 3 days, a very, very small amount. So the low made on Tuesday, the 8th, looks like a plausible last shoulder low on a head and shoulder bottom that doesn't look bad at all. It's also going to have a broad double bottom involved in the process. And that would be the bullish buy signal that I got on January 14th of 25, and the low that was made also on May 22nd. Thought there was another low way back when. That one's too low. It's this one in here. These two look like the double bottom. That's just simply a bottom with a buy signal on my ER signals. That's great. You know, the really profound ones don't happen very often because you're not getting the highest high or the lowest low for multiple months very often, obviously. Anyway, looks like potential head and shoulder bottom developing in bonds. What about notes? No good. This low on April 11th is too low. It needs to be above the lowest low, the head, and that is not true. So you just got yourself a market that's going sideways since March, essentially. Got a nice, beautiful big sell signal at the top of the rally. Nothing particularly great at the bottoms. Back up to resistance at the moment. Let's just wait. Crude. Good break. I thought the market wouldn't carry very far. Maybe it would get up to the resistance line. Didn't quite make it. I think we're now starting to move back down toward these support levels and maybe even breaking the support levels. So let's come down to 64.20 again and see what happens next. We've got oversold condition yesterday for the first time in a long time in natural gas. The bigger picture is the complex head and shoulder top that is working great. Since we're in a support area, I am not surprised, and I said exactly that yesterday, that we might bounce, and that's what we got. A little bit of a bounce, but it's a doji. It's just simply higher than yesterday's close. I would expect the bounce to maybe come up to 3.4, 67, maybe even a little higher. The big rule here is you can't go above the neckline. That's this line right here. Can't go above that. That would kill the whole formation. As long as you're staying below, oh, I don't know, approximately 3.7. Remember, it goes up every day a little bit. And then turns into new low ground. Working great. Could go into new low ground any moment. It was only oversold for one day, barely. I'm looking for almost all the way down to 1. Next chart. Coming down in heating oil today. Started yesterday. We did have an outside down day yesterday. Bearish engulfing, indicating that we should come down more today, which we are at this point, with a low lower than yesterday's low. I do think we're on our way down first to 2.28 about, and then 2.22 about. And if we can break below these lows made in early, or rather late June, then a major support area down here would be expected at 2.1. Next, gold between a rock and a hard spot. I'm not talking about it very much lately. Can't make a decision. Silver, minor new high, getting close to overbought again. Got to look at this in a friendly point of view because the trend is up since the lows in April, and you have made new highs for a long, long time. I think we're going to attack the highest high at 37.7, and we'll see if it can close over that. If it does, then you probably have another leg up of significance. Next, same kind of commentary for platinum, almost identical. But copper is a different story. Apparently, there was some kind of tariff talk, of course, 2 days ago. It did hold and close above the previous high, which I talked about on that date, July 8th, 2 days ago. It is, like I told you, it might start to pop back up again if the support level closes. The key when you do something like this is to close above old highs, which it did. Then when you come down toward the old highs, you don't want to close below them, and it didn't. So today, we're rallying some more. I think there's a good chance we could attack the highest high for the move at 5.89, call it 5.9, and probably make new highs. Okay, what about beans, oil, meal, corn, wheat? Beans don't look good, except they're getting close to oversold, and they're bouncing a little bit off of some support. That's not really good enough to turn me long-term bullish. I really have to close above 1077 like I've been talking about for weeks. It didn't do it. A bullish signal at that low was only good for a few days. Made some money, but didn't continue to go up. No upside breakout. Now, for the last couple of days, we've seen new lows for about 3 months. Not normally good. This big head and shoulder bottom is dying. We're not supposed to go sideways this long. We're supposed to have been going up above, above, and above, and break out. It's doing the exact opposite. I have to be neutral and maybe a little bit more bearish if I don't see something happening that's bullish. And I did in oil. We did have a classic bullish breakout to the upside gap. We had a retracement back to the neckline, which held. We had an attempt to make new highs, which stalled out a few days ago in overbought conditions, and a little bit of a dip. So there's nothing seriously wrong with soybean oil head and shoulder bottom, which does have an upside objective of way up here to 62-ish. So I have to maintain my long-term bullish objective while allowing for a bit of a dip down, maybe closer to this low, but not necessarily to the neckline. I don't want that to happen. We already had the test of the neckline, already closed most of the, or at least half of the breakaway gap. I think this could turn around and start to rally into minor new highs and major new highs soon. Meal. Today, brand new, third As long as we stay higher on the day, we can't close below yesterday's close. That kills the signal. But as long as we stay above yesterday's close on the close today, we will have a green bullish engulfing buy signal. The last couple signals didn't work at all or a little bit. Now, I've talked about this many, many times in the 2.5 years I've been doing this YouTube. These green and red bearish, bullish and bearish, respectively, sell signals, buy signals and sell signals, sometimes cluster during the bottom formation and top formations. They are not always, although I love it when they are, the highest high or the lowest low for the turn. This could be the lowest low. Doesn't look particularly aggressive, doesn't look particularly profound at the moment, pardon me, but they are not always super profound looking. Watch out, this could be the bottom. Next, doji and corn, sideways, boring, slow, dull, not much to say. Rally back up to close this gap of a few days ago. Sure, why not? Rally back up to the resistance area of 423.25. Yeah, maybe. Not particularly optimistic about it. But we can see new lows first. Not oversold. Coming down. Nothing here that I can talk about that's particularly bullish. Just real minor stuff. Even if it does rally, there's so much above the market resistance-wise, it's going to take quite a bit to turn it intermediate to long-term bullish. Wheat does have a bullish engulfing today. Nice. But all it implies is it's going to finish closing a gap 556.5. It'll already close some of it at today's highs, and it's real close to today's highs right now. So I wouldn't be surprised if it did it today. If it keeps going and starts to close above 570, then I'll have something significant to talk about on the bullish side of wheat. Otherwise, I don't know, this damn thing is just bobbling around periodically every month or two or three, making lower lows. Got nothing major long term. Okay, Shell stock popping up. A little resistance at a high a few days ago. Still, the top of the market is a bearish engulfing on June 23rd. I got to use that as my major factor here. So I think it's going to turn down maybe today. Next, bearish engulfing, also the highest high so far in Apple, but starting to rally back up. Didn't work particularly well, just a very minor amount, but it did provide some profit potential. Between a rock and a hard spot, and I'm going to leave it at that. The red bearish engulfing causes me to say that we're going to test support first. Next, support held a couple of days ago on the dip. Gap to close is almost closed. We're still in progress of rallying to close the gap. This is Tesla. So I'm looking for a little bit more strength up to 312.40 and maybe even more. Since March, with a bit of a double bottom, the market is headed higher. By the way, I think this double bottom worked almost extremely accurately. I'm going to put the measurement stick in here real quick again. That's the average of the two lows, that low and that low. I didn't pick the lowest low. I picked the average. It's super close anyway. And there's the highest high. Now, that's the depth of the formation. You take the stick and you put the bottom of the stick right smack at the highest high, and the upside objective would have been right there, and bingo, it hit almost exactly and turned down. That's a little demo on how double bottoms and tops are measured for their objectives. And I've done that a few times before, a couple of months ago. So I'm mildly friendly to close the gap. And after that, we're between a rock and a hard spot. One more, NVIDIA, overbought, gapped up a third time recently. No new high yet, but super close. Could be starting to roll over. I can't tell completely. Minor upside exhaustion gap yesterday. Maybe. Looks like the right place for it. There are some gaps to close a little lower, about 148 and about 145. And that's not a huge break from 160. but I'm voting for a minor top here, and I move down to close the gaps. Back to the E-mini. Look at the 1 minute chart. It's still chugging along, doesn't want to quit. We're up 2 and a fraction, or 22.75 at this point. Yep, everything looks like it's still chugging up. You guys have a great day. And by the way, I want to remind you, I'll be starting to do my YouTubes after 1 o'clock on week trading days, on all trading days, instead of around 9:45 to 10 o'clock in the morning. I'm going to wait till the market closes starting next week on Monday, the 14th of July. Thank you. Have a great day. Profitable trading to you.